back to Powerlunch, shares of Alibaba jumping today, even though Ant Group, which Baba partially owns, has to pay nearly $1 billion in fines. So why are investors reacting so optimistically to this fine?
On one hand, $1 billion fine is a lot of money. It's one of the biggest fines levied on a Chinese company by the authorities. But the bigger point which investors are reacting to is that this perhaps signals the end of all of this regulatory pressure on Ant Group that started way back in 2020 ahead of its IPO.
Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence.
China technology companies have been out of favor for the last few years due to the heavy tech crackdown by the Chinese government. In this video, let's look at the Alibaba stock, which is one of the well-known Chinese companies but has been doing very badly over the last 2 to 3 years. Let's take a look at 20 possible catalysts to make Alibaba stock price go higher in the next 12 months. Number 20. Higher than expected growth in China e-commerce as well as the cloud market overall. According to McKinsey, China's public cloud market is expected to more than double in size in the next few years, from $32 billion in 2021 to $90 billion by 2025. Number 19. Higher GDP growth of China in 2023 and beyond. International Monetary Fund expects China's growth in 2023 to be around 5% followed by around 4% growth till 2026. Number 18. Monetary and fiscal support by People's Bank of China and Chinese government. China's economy has not picked up enough steam following the opening from COVID lockdowns. Investment community is expecting a huge stimulus package to likely be coming out soon with the focus on providing mid to long-term growth. Number 17. Ant Group's higher than expected revenue and profits. Alibaba, which owns 33% of Ant Group, made 56% less year-over-year profit earlier this year. But the revenues and profits, once the tech crackdown is over, is expected to rise significantly. Number 16. Increase in inflation in China. China is currently experiencing somewhat of a deflation, but the general expectation is that inflation will be coming to Chinese consumers. This helps with higher revenue and possibly higher profits. Number 15. Accelerated share buybacks. Alibaba has been buying back its shares at a rapid pace during these low share price months. It has a $40 billion allocated towards buyback running until March 2025. Before we continue further, if you are enjoying this video, please smash that like button so others can find this video as well, and make sure to subscribe to receive next videos. Number 14. Ant Group's lower than expected regulatory fine. As part of the tech crackdown, the Chinese government has been reviewing the practices followed by Ant Group. Recently, the investigation was concluded with a fine of around $1 billion. This was lower than what analysts had predicted. Number 13. Ant Group's approval of financial holding company license. For more than 2 years, Ant has been working under the guidance of Chinese regulators to turn itself into a financial holding company to ensure its financial-related businesses are fully regulated. After the fine, the next step would be to obtain the financial holding license, which is crucial for reviving any listing plans by Ant. Ant is very likely to get this license now. Number 12. Ant Group's announcement of IPO plans. Ant Group's IPO plans 3 years ago started the tech crackdown. With the regulatory crackdown reaching its end, Ant IPO will soon be on the cards again. But the company, which was once valued at around $300 billion, is now valued close to $80 billion. Number 11. Lower base for comparison in the coming quarters. Given the COVID lockdowns in China, Alibaba's revenues were already impacted over the last 2 years. Revenues largely stayed flat or even decreased in some segments. This gives Alibaba much lower base to compare the growth in coming quarters. Number 10. Announcement of Freshippo's IPO date. Launched in 2016, Freshippo is Alibaba's retail chain for groceries and fresh food. It is estimated at around $200 billion in market value. As per news sources, the plan for its IPO is already underway. Number 9. Alibaba's other segments IPO announcements. As per a company announcement in March 2023, Alibaba plans to split its business into 6 main units covering e-commerce, media and the cloud, adding that each will explore fundraising or initial public offerings. Number 8. Alibaba's dual primary listing in Hong Kong. Alibaba Group is seeking to upgrade its secondary listing in Hong Kong to primary status so it can attract more investors from China. This allows the company to have a wider and more diversified investor base, especially from China and other markets in Asia as shareholders. Number 7. Change in sentiment for Chinese equities. Over the last 2 to 3 years, the market has been extremely bearish on Chinese stocks. But slowly the sentiment is changing as we see major banks such as JP Morgan talking about China's growth prospects. Although, we are also seeing that the recovery from lockdown openings is fizzling out. Number 6. Funds flow from rest of world to China equities. As per Bloomberg, the fund inflows to China has increased somewhat in 2023, up to June, compared to 2022. Number 5. Decline in US dollar exchange rate. With a strong dollar, Chinese companies reporting revenues seem weaker. So, any weakening in the US dollar will help Chinese companies report better financials from an exchange rate perspective. Number 4. Lowering of US interest rates. In the US, we are reaching a point where the interest rates are expected to not be further increased. This helps in the valuation of companies that are investing heavily in developing capabilities today and expecting revenue from these investments in the future. Alibaba has several investments that will be valued higher once interest rates are paused or lowered. Number 3. End of Russia-Ukraine war. Although, we don't see major signs of an ending of the brutal Russia-Ukraine war, when the war ends, it will be a positive for the global economy, including for the Chinese companies. Number 2. Easing of China-Taiwan tensions. For the last 50-plus years, China and Taiwan have coexisted without the level of hysteria that we are witnessing these days. As China and Taiwan reach a new equilibrium in their relationship, we can expect this to be a positive for the global economy, including for the Chinese companies. Number 1. Easing of China-US tensions. This is likely the current number 1 reason for the low valuations of Chinese equities. As US and China find a rebalance in their relationship in coming years, we can expect to see positive impact on Chinese equities.
For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more videos on memos and write-ups from top investors.